always invest money through life insurance first. That's one of our philosophies and strategies. So what I always do is I put money into my cash value life insurance that's designed specifically to be high cash value, low death benefit, low cost. I put the money there and then I funnel it into my other investments. And by the way, that's just a secret. It actually creates a higher return on the exact same investment. I know that sounds crazy. Most people are like, well, that doesn't make sense. It's just a money flow math game. And when you understand how to do it, you can literally create, an extra 10, 15%, of the return just in addition to it, just by flowing your money differently.
Welcome back, everyone, to the From Crisis to Justice podcast. I'm your host, Parag Amin. Today, I'm joined by a very special guest, Christian Allen. Christian is an 8-figure entrepreneur and investor and principal of the Money Insights Group, which is an alternative wealth building firm for high income earners. It has over $250 million in assets under management. Welcome, Christian. Thank you so much for being on today.
Parag, thanks for having me, man. This is super exciting. I was just telling you, I love the name of the podcast and the idea behind it. So I'm excited to be here with you. Thanks for having me.
Yeah, my pleasure. So, we have somewhat of a similar story, even though it differs in some key aspects as well. But could you tell the listeners a little bit about how you got into this space of wealth building and advising high income earners?
Yeah. So the similarity, and we just talked about this before we got on, but we both had family situations that led us to, maybe feeling like we had a calling or we needed to correct something or an injustice, right? An injustice. So my story is really pretty simple. So when I was 19 years old, my dad passed away from pancreatic cancer. My mom was the same age. She was kind of left now to figure out life post that. And she was a stay-at-home mom, 7 kids. And so I think, that alone, obviously this is a massive change, but that change alone was kind of eye-opening for us. Well, the next step was, how does she deal with the money aspects of, this new way of life? And the good news is my parents together had been smart, thoughtful, and had enough money that she was able to, from that point on, live at least a relatively comfortable lifestyle. I wouldn't say it was quite up to the level it would have been had my dad been there, but at least it was like a comfortable lifestyle. She wasn't having to go back to work and that kind of thing. But what happened is as she went out to invest some of the money that she got from her life insurance proceeds, as an example, unfortunately, she met with people and met with people who didn't have her best interest in mind and ultimately took advantage of her. So I remember she had maybe $400,000 after she paid off the house and that kind of thing. And she had put, I think it was $80,000 into what was a real estate, or it was a REIT, except that it wasn't a REIT. It was actually a Ponzi scheme. It was a really sophisticated Ponzi scheme. And she ultimately just lost all of that money, gone by, right? And so that experience was just so devastating in the sense that I'm thinking, she didn't have that much. She had some money, but certainly not enough to be able to afford to lose a lot of money, right? So I just felt I think driven to correct that action, right? Just when you see someone taken advantage of, especially when it's someone you care about, you can't help but to want to do something about it. So anyway, that was kind of what got me interested in the financial services business as a whole. And I think that ultimately is what has driven me to start Money Insights. Now, there was some years in between that moment happening and where I am today, where there's been a lot of different, curves along the way. And yet I always draw it back to that. I want to make sure that we're doing the best job for people, that people aren't getting taken advantage of. And sadly, that just happens too often. So that's kind of my story for at least getting into the industry in the first place.
Wow. So you wanted to create a solution that you wish your mom had when your dad passed.
Yep, without question. And, we kind of morphed into a group that focuses on high income earners. But if I'm being totally, forthright with you on that, that was more business philosophy than anything else. It's just our business grew out of the ability to service everybody in the same way. And so we started focusing on. Now, I did see a massive issue in the high income earner space, by the way. And the issue was, one, that high income doesn't necessarily mean high net worth or wealth even. And number two, high income can, for some people, end up being more of a detriment. But here's the deal. You can't go the traditional path, right? So the traditional path is failing people. And I think that was kind of my other big moment. Between my mom being taken advantage of, between watching everybody, teach, okay, max out the 401ks, which, by the way, absolutely can be a good thing, but relying on 401ks in the market to create their wealth, it just wasn't working. And so I just throw that in there as kind of a catalyst to the point in time where I got kind of interested in the industry, to that next point where I started Money Insights, which has been about 12 years ago.
Okay. And so what really distinguishes or differentiates the high income earners from the high net worth individuals, and traversing from going a high income earner, which, by the way, let's define that. What do you define as a high income earner?
Yeah, this is a pretty fuzzy one, right? And so usually I try not to define it, if I'm being totally honest. But because our market is we have a lot of high income physicians and attorneys. And so I would say that's probably in the, 250 and above type range. And maybe a good, trying to think of the right word, a good measuring stick. Maybe a good measuring stick would be if you're an accredited investor, right? So if you're an accredited investor, that at least I think would kind of put you in that range of high income earner. But so back to your question, Parag, what distinguishes the two? There's a few things. One is my experience tells me that the people who move from kind of high income to high net worth learn how to integrate the alternative investment space into their world. So there's some real valuable stuff that we get from saving. Now, and you can't build wealth without saving money, right? So you have to save. And so maybe I should put that one out there as an obvious. But one of the things that distinguishes is the people who spend it all versus the people who actually save. Okay. So now let's just assume, though, that everybody is saving, 20% of their income. There's still some hugely distinguishing factors. And the first one I would say is the people who invest in the alternative space, which for me means my own business or some other people's businesses. It means real estate. It means hard assets. There's a variety. It basically means anything that's not typical stocks, bonds, and mutual funds, which, like I keep saying, have their place. But what I noticed is that people who were wealthy had found themselves investing in that space. And it's not just because of the returns, right? Returns are one element, but you can get good returns in the market if you do it the right way, right? You can get good returns in real estate. But I think the biggest differentiator on that was alternative assets have real tax benefits baked into them. And so as a high income earner, what ends up happening is taxes become more and more impactful. And that's a big part of what's kind of keeping people from, being able to get over the hump and actually build real wealth. They end up, thinking they have more money than they have. And then, there's the typical stuff like lifestyle creeping and things like that. But I would say those are the primary things that distinguish the two.
Okay. And so let's define high net worth. What is considered high net worth?
Let's say 10 million and above.
Okay. So 10 million and above and 250K plus in annual income. So in terms of bridging the gap, I think part of it is, it's not just saving. It also, it's a big component of investing, right?
Mm-hmm. Yeah, I think that's a huge part of it. And like I said, I think the biggest element is there's an efficiency that oftentimes, so there's this kind of battle that happens in the financial services industry between traditional investing, which again is your 401ks and the stock market and things like that. That's defined that way. And the reason it's traditional now is just because it's been so saturated, marketed, and that kind of thing, that's where the grand majority of people, that's where they play. Well, then on the other side, you've got the alternative space, right? And what's happened is typically we find that people play on one side or the other. And it's kind of a weird, bizarre thing. Now, we probably end up, nudging toward the alternative space because we're pushing up against so much traditional, it just has so much more momentum and it has so much more hype, right? So anyway, back to my point, like when you're able to bring those two things together and suddenly I'm using the best of both worlds, I'm investing wisely. I'm making sure that in conjunction with my investing, I'm considering things like asset protection, things like tax optimization, estate planning. And at the same time, I want to make sure that I'm using core principles like leverage, velocity, and cash flow. And if you think about it, leverage is a huge one. In the traditional space, it's very rarely a piece of it, right? Now, I'll say this. We always teach people conservative leverage is the way to go because while it's like our most powerful wealth building tool or principle, it's also the thing that can hang us the fastest, right? So there has to be some balance in using conservative leverage. But when you can bring the traditional and the alternative to a place where you're creating balance, I think from my experience, that is without question been the best model for people to create the kind of lasting generational wealth that most high income earners are trying to come up with anyway.
Yeah, totally. And so part of this is mainstream or traditional investing. Almost everybody has heard of stocks, bonds, mutual funds, that kind of thing. And those get marketed pretty heavily. Now, there's the aspect of alternative investments that people just don't hear much about. And there's a big gap between knowledge and what somebody knows about and can actually be able to apply in the real world. So what I mean by that is, for example, like the story of your mother and how she got taken advantage of, including the Ponzi scheme. She didn't have the knowledge seemingly of how to vet a good investment versus a bad investment versus a good investment advisor versus one that isn't a good investment advisor. And there's an aspect of having heard about something versus actually knowing about it and feeling comfortable enough that this is a good investment. And so a lot of times, I think the challenge with alternative investments or the concern that a lot of potential investors have is I just don't know enough about it. I haven't heard enough about it, and I could really get hurt or scammed in this area. So could you give the listeners some tips on what to look at or consider when looking at alternative investments, and what are some examples of alternative investments that you might suggest or recommend?
Yeah. So first of all, I agree with what you said 100%, Parag. Like that is one of I think that anybody moving into the alternative space is absolutely right to be concerned going in about the possibility of losing money and being taken advantage of. The issue is that the alternative space isn't as regulated. So we talked about like people don't know about alternative investments as much. They don't know where to find them as much. And this is the real key. They're not easily accessible for everybody, right? My 401k makes it very accessible for me to just like get the box on my HR form. I'm now moving money from my paycheck to my 401k. So again, that has tremendous value, right? Putting it on autopilot, but that doesn't really exist in the alternative space. So back to your question, well, what do we do to vet them? There's just some simple principles that I always use and that are pretty non-negotiable for me. So the first one is I have to have like a strong track record. Now, when I say a strong track record, I'm not talking about 6 months or a year or 2 years. I'm talking about 5+ years at least. So, for me, it's just not worth it to take the risk on potentially people who don't have the experience. And maybe they haven't worked out the kinks in their business model and in their investor flow to be able to, for me to feel comfortable that they can deliver consistently on their promise, even if there's, good opportunity. Now, I'll say this, I should probably back off. When I say that, I always leave a little bit of money for more speculative things. And so I like investing in startups, but in a startup, that's totally different. So let's kind of look at it like a real estate syndication deal, something like that, right? That would be a typical thing that we would see a lot of high income earners invest in because you're getting the tax benefits of the real estate, you're getting the core ownership benefits, but you're not having to do all of the work. It becomes a little more passive. But then, of course, the question is, how do I determine whether that investment makes sense for me? And I think the first part is you've got to go get some knowledge. By the way, this is one of kind of those key elements. Most people aren't willing, or just maybe aren't willing isn't the word. Most people haven't taken the time to go and learn about them in order to get comfortable. But here's what happens is when you take the time to get comfortable with them, just like when I learn about a mutual fund and I get more comfortable with it, I can do the exact same thing if I'm talking about real estate. It's just one of those things where if it's in your milieu and you've taken that time, then you can speak the language, you pick up on it, but you have to do it, right? You just have to take the time to actually do it. And then, like I said, you've got to go with people that have a really great track record. That's a non-negotiable. And then the other thing that I do is I bounce it off my key people. So we always talk about making sure that you're surrounding yourself with good people. I'll always take any deals that I'm considering to a few other people just to get their opinion as a third party. And I felt like to this point, it's done pretty well. Now, I've made two investment decisions that I regret that haven't done as well as I would like. And I think when I look back on both of those, I neglected at least one of those steps. I didn't do all three of those things. And, that's kind of what got me burned.
What were those investments?
Okay. So the first one, this is really interesting. So I live in Salt Lake. About 4 hours south is like Zion's National Park. It's like very, very desert out there. Right. But it's also a place where tons of people go to, they go to visit. It's touristy. I have a friend who lives out that way, and he owned a piece of land that was kind of in the sticks, and we were, just kind of kicking around ideas. And the idea that we came up with, and it wasn't a bad idea, but it was yurts. We were going to put a bunch of yurts on that piece of property. And we got really excited about it and started the project a little bit, and only to find out that we were not able to get water rights. I shouldn't say we had water rights. We didn't have water. We dug down, we went down forever and just could not find water. And suddenly our entire investment was just like, okay, this is going to work if we can't bring water to people while they're here staying in this kind of glamour camping situation. So the first one that I made a mistake on was the yurts. I probably lost, I probably put like 25, 30 grand. I was pretty young when I did that. And that one didn't go as well as I would have hoped. So that's the first one. The second one is a more recent one, which I'm a little more embarrassed about, but at the same time, I kind of get what happens to people. So there's been a big trend investing in ATM deals, right? And so what happens is a person's investing in ATMs that depreciate over 7 years. So there's a tax benefit to it, but there's also just a payout that's supposed to happen over 7 years. And this became pretty popular in the alternative space. And since interest rates have risen, and over the last 6 months or so, it feels like most of these ATM deals are starting to run into hard times. Some of them are just blowing up altogether. I know that the payments on my ATM, I think me and my partner put a couple $100,000 into it, and the payments recently stopped, and so now it's going to be a legal battle to try to get a hold of the assets that the underlying company holds to get investors as much of their money back as possible. But I have a pretty good feeling that one is not going to pay out the return or even the principal back to us like we would have expected.
Yeah. Wow. So in terms of the second one, in terms of the ATM investment, what do you think you could have done differently that could have prevented this outcome, if anything?
Yeah, no, I definitely look back and think I was just as guilty as anybody at getting a little too excited about the high. Now, I wasn't early on in it. And actually, the irony is if I would have been early on, I probably would have done reasonably well in it. But because I waited in this situation, it ended up being, more problematic. But here's the deal. it had a really great pro forma, I think it's kind of one of those things where when it looks or feels might be too good to be true, it just probably is. And it's interesting, Parag, because I still don't know. I still am not at a point where I understand like what's happening in the background of that investment. Like it's being actively litigated as we speak. Um, but it would be really, I think, disingenuous for me to sit here and say I couldn't have just actually studied it with a little bit more diligence, done a little more due diligence, and found that, hey, there might be some flaws in this that could have been avoided. Now, I say that, and at the same time, you're right that not every investment mistake is avoidable, right? And also say this: while I've lost money on a couple of things, I've had incredible returns for the last 12, 13 years. The alternative space has gone crazy, and so we've been talking about 30% returns year in and year out. So while I have been burned a little bit, I'm so much further ahead than I would have been, even though I didn't go into those investments expecting or hoping to get 30%. It just kind of ended up doing that. I put myself in a place where I thought we had good, solid assets that should pay consistent returns for the foreseeable future.
Got it. Yeah. So what would you say, and you can't say crypto, but what would you say has been your best alternative investment?
Well, okay. So this is a little bit tricky. I'm going to give one caveat. My best investment without question has been the investment in myself and my own business, right? Like I've built wealth through that in a way that just like no amount of investing, like I don't know how I could have done it in that way. So I always talk to people about alternative investing. One of those things being your own asset, your own business. Excluding that, I've without question.
I'm sorry. Can I interrupt you 1 second?
Yeah.
So can we dive in a little bit deeper on that? So what does that mean? I mean, what kinds of things have you specifically done to help yourself, your business? Is it further education, courses? What specifically, and how did it help you?
Oh, so you just mean, so what kind of investing have I done in my own business? Yeah. Okay, great.
No. Well, yes. So specifically to your answer of, one of the best investments you've made, one of the best alternative investments you've made is yourself, your business. And what does that actually mean?
That's a great question.
Literal terms.
Okay. Good question. And I'll try to bring it together without rambling on too long, but here are a couple of thoughts. One, it's kind of all encompassing, as a business owner that there's just like a bunch of these things going on simultaneously. But when I say that, I literally mean money, right? There's been many, many times where I had the opportunity to invest in an outside deal or invest in growth within my own organization. And typically I'll invest in the growth, and I've done incredibly well in my own organization over that. Now, what does that mean? It could mean that we're expanding into a new strategic partnership. It could mean that we're, bringing out an entirely new marketing campaign that could cost a lot of money from an ads perspective. Like there's a lot of things it could specifically mean, but I think more than anything, it's investing like the time, the money, the energy into yourself. But again, when we're kind of equating that to alternative assets, I'm literally talking about money. I'm saying when I could have invested in other places many times, I chose to invest in myself. Now, man, I hope I don't contradict myself too much here, but I also want to say that I 100% believe that you need to pay yourself first as a business owner, because it can get too easy to invest everything in your business. And especially if your business is struggling, you're in the starting space, like you just have to be disciplined enough to put some money away, pay yourself outside of your business first. And then you can feel like that freedom to invest more inside the business. Was that helpful, Parag? I know I'm kind of all over the place.
It was helpful. So let me ask you, with the money that you reinvested into the business or into yourself, what did you spend it on that you found was a really good ROI for your money?
So it was probably about 5 years ago. Well, not quite 4 years ago, I guess. 4 years ago, we invested time, money, and energy into the podcast. We felt like we wanted to have a bigger voice. And, honestly, I had planned on doing it a couple years earlier and put it off just because, things were going well. We were still thriving as a business, and it felt like, okay, that could be fun and interesting. But here's the deal. So I had to take a step back, basically carve out time, energy, and of course some money. It's not that expensive to start a podcast these days, right? But I had to put aside that time and energy more than anything. And by doing that, we've created business for, years to come, because now we're putting something out there, as you know, that's in an evergreen funnel where someone could listen to something I said 2 years ago, and that could spur them to say, oh yeah, that's really interesting. That resonates with me. I got to talk to these guys. And we get a phone, and then suddenly I say phone call, like no one calls us, right? But we get a meeting request. So anyway, when I think about investing in my own business, like that's what kind of comes to mind. I have invested in a lot of other things money wise. I'll give you an example. Right now, we're holding a virtual summit on, I guess it's September 12th. I don't know if your pod's coming out the same day, right? So, but we're going to be,
right. Yes,
we're going to be, holding a virtual summit, and I can't say the exact price. I'm not allowed to, but we paid a fairly significant amount for like our keynote speaker, who we felt would be a good, would really resonate with our audience and, be the right fit. So things like that. And, honestly, on that one, it'll be interesting to see whether we get the ROI from it or not. But those are the types of things that come to mind when I think about that.
Yeah. Can you tell us who the speaker is?
Yes, Damon John. So Shark Tank's cool. Damon John. He's obviously super cool. We're really excited to have him. It's going to be like a fireside chat style thing. So it's basically like just come and ask Damon any questions. Obviously we're going to focus on investing in general as kind of the underlying theme, but well, everyone knows Damon. He's got a really cool story, and I'm hoping, to dive into it a little bit and see if we can get some nuggets out that maybe he hasn't shared with other people in the past.
Yeah. And how did you get in touch with his team? How did you convince him to do this with you?
So, it's a good question. Actually, the connection came from our mutual friend, Steve Carlos at 2MM. He does a lot of our marketing, some of our PR and stuff like that. And he knew, gosh, who is it? It's a big name. It's a really big name YouTuber. I'll think of his name as we go through this, but a big name YouTuber that Steve reached out to, gave us Damon's contact information, and we were able to get directly connected to him and to his team, and have that conversation and get it set up. And so it was one of those things that came around, but yeah, that's how we got Damon. And I think it's going to be super cool.
Yeah. Looking forward to it. Looking forward to hearing about it. So going back to what you were saying earlier, one of the best investments you've made is one of the best alternative investments that you've made is yourself and your business. And then you were going to tell us about the other best investment that you've made.
Okay. Can I tell you about a bad investment though? I forgot. I have one other one.
Yes.
So man, people are going to be like, gosh, who wants to take investment advice from this guy? The good news is we're not giving investment
advice. You've learned
advice.
the hard knocks.
Yeah.
Well, right. And I mean, when somebody says that they've never had a bad investment, it tells me one of two things. One, they've never invested, or two, they're lying. So yes. The reality is everybody who invests has had some kind of bad investment, but go ahead, please.
Okay. So I forgot that I had this one, and this was probably my biggest blunder of the bunch. About, I guess it was, 7-8 years ago, I decided that I wanted to, and I still believe in this, I wanted to invest in other businesses, right? Like I wanted to become diverse as an entrepreneur. My core business is Money Insights. It's been like my bread and butter for a long time. It's my baby. But I also wanted to build other businesses just as an entrepreneur that was interested in a lot of things. And so I started looking around to purchase a business because I didn't want to necessarily just build it from the ground up. So I ended up purchasing a business. It was a day spa, and I really thought that we could run that business non-owner operated. Like we went in there feeling like we had a good manager in place. We had a lot of the elements that we thought would be really good. And I learned a hard lesson there. Now, I didn't lose a ton of money. Well, no, I mean, we lost some money, but I didn't lose. It's not the money that I lost as much as it is that I learned a huge lesson. And that was simply that investing in the things that I already know and I'm really good at is sometimes just a better option than trying to go do something new just to do something new. Right. So I found that while the amount of effort we had to put into that business versus what we were getting out of it was just so far out of whack that we couldn't make sense of it. And so owned it for 3 years and ended up selling it a little bit later. So anyway, those were kind of my 3 worst investments of my life. And hopefully they're the last ones. Probably not, but I hope so. Okay.
Yeah, I'm with you.
Parag, remind me your other question.
Yeah. So the other question is, so one of the best alternative investments you've made is yourself, your business, and you're going to tell us about other best.
Yes. Okay. The money machine over the last 10 years has been real estate, multifamily real estate syndications. It's just crushed it for years and years and years. Now, if you've been in it like the last year or two, you might not feel exactly that same way. And yet some of them are still doing great. But here's my point. It wasn't anything that was like super sexy, right? They were returns that were supposed to be solid. Like you'd get pro formas in like the 15% range. But what kept happening is the pro forma would say 15, but we'd end up getting 30 or 40 on a deal, right? And so over the, basically 2010 to 2020, like it was just crushing it in. And so I invested money back into those things. Now, I should also say, I always invest money through life insurance first. That's one of our philosophies and strategies. So what I always do is I put money into my cash value life insurance that's designed specifically to be high cash value, low death benefit, low cost. I put the money there and then I funnel it into my other investments. And by the way, that's just a secret. It actually creates a higher return on the exact same investment. I know that sounds crazy. Most people are like, well, that doesn't make sense. It's just a money flow math game. And when you understand how to do it, you can literally create, an extra 10, 15%, of the return just in addition to it, just by flowing your money differently. So sorry, that's a little sidetrack.
Because of the tax savings? There's
a tax savings element. There's also a really unique arbitrage element. So most people don't realize in life insurance, when I talk about borrowing money, and the reason that we talk about borrowing against a cash value life insurance policy is because you're literally borrowing the insurance company's money. Well, so now once I understand that, I've got 2 buckets of capital that I'm dealing with. I'm dealing with the insurance bucket of capital, the insurance company's bucket. I'm dealing with my own. If my own can just sit there and earn money and stay there uninterrupted while I use the insurance company's money, even if they're charging me an interest rate, I can still use the arbitrage between paying simple interest on my loans and earning compound interest on my investments. And then, of course, I have the outside investment, whatever I've used the cash value to go and invest. But that flow, in conjunction with what you said, the tax benefits, literally creates a higher return on the exact same investments. It's pretty wild.
That's great.
Yeah, kind of fun.
So what kind of advice would you have for somebody who's looking to get into the alternative investment space right now?
The first thing that I always tell people to do is start with education. Don't put pressure on yourself. Make sure you find some places that you can go that you can go and learn and kind of catch the jive, right? Just start to understand the lingo, get familiar with it. That's a big part of it. Once I get comfortable with it, so that's my starting point. And it's really easy today. Like there's never been an easier time to become educated. There's podcasts, there's audiobooks, there's obviously all of the classic reading. Like there's so many places that we can go to get really good quality information. And of course, like we know the credibility of the authors and the people who are giving it because we have Google right in front of us, right? So it's almost inexcusable in my mind for us to be like, oh, I can't figure out where to use Chat GPT, right? Anyway, there's a lot of things you can do, but my first recommendation is start with getting familiar, getting educated on the lingo in the industry. And then the next step is starting to determine, like, understand. Well, I should take a step back. Like, there's all the typical stuff that we always have to be thinking about, right? Like, what's my risk tolerance and those kind of things. But I'm just kind of taking those things for granted right now, just assuming, okay, those are obvious things. When we're talking specifically about how do I, like, kind of find investment deals, I like to go with things that I really believe in, things that I know and know, like, and trust, right? It's been a philosophy that's worked for a long, long time. It works really great in the investment space, because if I am familiar with them, I know about their background. I know about the credibility of the operator, the people who are putting the investment out there. If I've taken the time and energy to get educated, then suddenly those things are just like an easy situation to resolve. And now it's just getting comfortable. Well, how do I get comfortable? I get comfortable by making sure I know it, right? And that it matches my values. So bringing those things together, and I think it becomes easy. Like, I don't think I don't think 10 years ago I thought, oh, I'm just going to, like, really love to invest in multifamily syndications. Like, I knew I wanted to get more heavily invested in real estate in some way, but I look at that now and I'm like, okay, that worked for me because I put a lot of time in it. I didn't want anything to do with being a landlord or messing with that kind of stuff. So anyway, but again, I'm getting off track there, but that's hopefully some advice for people who are wanting to move into that. More than anything, just start by taking the time to get familiar. And the way you do that is by listening to familiar voices that you can trust.
Yeah, that's great advice. So, Christian, let me ask you, where can our listeners find you if they want to connect with you, hear your podcast, or follow you on social?
Awesome. Moneyinsightsgroup.com is our web address. You can go to it's investwithbenefits.com. There's several places you can go get us, but our podcast is the Money Insights podcast. My business partner, Rod Zabriskie, and I really enjoy doing that. We have a lot of fun. Built up a fun little audience of people. I think that's it. I mean, you can find me. I was trying to think of my Instagram and those things, but I don't do a lot on those, even though I do have my team post on those regularly. But if you actually want to get in touch with me, then feel free. You can always go to my website. You can always email me for any questions, Christian@moneyinsightsgroup.com. Really easy to find me. So that's how to find me.
That's awesome. Well, Christian, I'm looking forward to continuing to see your success. And to the listeners, thank you all so much for tuning in. If this is your first time listening, make sure you like and subscribe so you can hear new episodes when they come out, so we can hear and learn from excellent thinkers and movers such as Christian Allen. Christian, thank you again for being here today.
Thanks, Parag. It was awesome to be with you.